We say good morning to a good friend, Todd Horwitz, Bubba Trading. It's BubbaTrading.com, live from Chicago. Todd, I know that folks that maybe don't know, that aren't familiar with Todd Horwitz, numbers, you don't watch these crop reports all that close. I mean, they're numbers, but not in your book.
They're numbers, but again, the market's already pricing, and look at the rally we're having. Look at the bounce we've had in corn over the last couple of days. We got down under 340. 345 was our target on the downside, and now we're back at almost 365. So again, the street, the markets, they already know that these numbers are probably going to be bullish. Now, my guess is that they're going to overprice the bullishness of these reports, and we'll probably see a little bit of a sell-off. But I was really thrilled to see corn really hold that 345 at the end of the day. And I think if you look at soybeans, we're going to take a run at 1070. Last I looked, we were 1060. So I think 1070 is the upper end of this range. We've had a very nice bullish move, but we broke out from that 1020, and now we're kind of trading in that range. We got down to 1026 before this rally took off again. So again, the numbers are already really priced into markets. We have a lot of anticipation going forward. So that's really what I see.
Now, looking at those numbers once again, the futures, corn futures, as you mentioned, March up at the 364. They're higher, only a half a cent from the high of the day. And then the soybeans. I want to get your thoughts there as well, especially beans at March near 10. Well, in fact, they've been 1071 and a quarter at their high. If a producer still has beans, and I understand a lot of those beans have already been sold, but if they still have some, want to let some go here?
I would think so. I think we're, again, I love the space overall. As you know, I'm very bullish, but I think overall, I think we're going to see a pretty good pullback, and I don't see this range being broken. So I would certainly take a little bit off, or at least hedge up here and lock in so you know where you can get out in case it does not continue to go higher.
Very good. And in our wheat trade, just to complete the circle here, and we'll take a break and talk about the livestock trade here, but wheat higher by 3.5 in Chicago March. Kansas City, the March contract there, up 3.25, and Minneapolis, the March contract right now is higher. Minneapolis by about 1.50 to 2 cents at last look. Todd, I want to get your thoughts before we do take a break here on those outside markets. You watched that as well. New record high in the Dow yesterday. Dollar under pressure, dollar back higher today here. Talk about the outside markets.
Mark, we're living under the biggest illusion that Houdini would be proud of everybody for the way they're eluding the market. Look, we still have a problem with jobs. We still have a problem with growth. We still have a problem, so many problems. Now, again, I like the plans and the forward-looking things that we're hearing about, but the dollar is well overpriced here, and really what that's telling you is there's more fear out there than they're letting on. I think the dollar has reached its high. I would be a big seller of the dollar in here. I think oil has reached its high. I'm looking for that to go back lower again, although we're, they're testing us. And I think the Dow, seasonality tells us that we could continue to dribble higher here a little bit, but the rallies have been on no volume and real no force. So I think once the Fed does actually raise rates, which they'll do next week, and once we get through all this, starting in the next year, there is going to be some sort of a correction, and I would be very careful buying equities at these levels. I think you're well overdone, and we cannot meet the dimensions that were being put out right now.
Very good. Todd Horwitz from Chicago Live, looking at a higher corn, higher soybean, higher wheat trade. What about the livestock complex? We'll get his thoughts there in 1 minute. Be right back after this. Welcome back to Market Day Report. We are 10 minutes to the top of the hour. Back to Chicago and back to Todd Horwitz. Now looking at the livestock complex here, looking at beef overall here, cattle and feeder cattle. Your thoughts as we enter this, well, into the first full week of December.
I think we've seen a very nice rally. I think that we've watched it, and we've had some beautiful levels, and I think we're going to see some selling pressure here. Feeders have been a little bit weaker over the last couple of days, but I'm targeting 120, 121 in the feeders, and I think that they will easily get there. And then I would look to, again, be a buyer and reload. I think that the fats are going to probably get down to 106 or 107. I believe that, we've seen a great rally. Now, if this rally is going to continue, which I do believe it's going to happen, I think we need some selling that makes the health and the wealth of the market better, because the two-way trade, the profit taking, allows new buyers to come in and then push prices higher. And I think that's what we're going to see. If we continue to go straight up here without stopping, I think that would be more of a warning sign to me down the future, and I'd be more concerned, and I wouldn't be as bullish as I am correct right now.
I know that in talking to you, I wanted to get your thoughts, have the viewers and listeners hear your thoughts when you talk about the pork complex. You had been talking about 54, 55 is going to be really tough to get through. Well, we look at hogs, and they're 56 or better, and your thoughts on that pork complex?
You know, Mark, I think there's something underlying the surface here, and I think there's some type of news. You know, everybody talks about maybe it's Mexico, they're buying more here. There's a lot of reasons why, but I think there's something else that has not come out yet because the markets have been way too strong here. It's not like a little bit. They have not been able to really break in weeks, and we continue to push higher after we had those panic lows back a while ago. In my mind, either we're going to see a very big sell-off very soon, or there's going to be some sort of a news item that we have not accounted for yet that nobody can see, but it's out there and people are trading off of it. You know, the bigger firms are trading off of it because something is holding this market in place because it refuses to go down. It keeps holding, and begrudgingly, if it goes down, you know, 10 or 15, it's like an unbelievable sell-off. So I think something is underneath the market here that is actually holding it up, and we'll see how it plays out. But either there'll be a news item or we're going to see a pretty good sell-off in here.
All right, we'll watch for that. But now, in the meantime, with we are where we are, does a producer want to take advantage of these February hogs over 56?
I think you should either take some profit or you should hedge out here and protect. Again, I'm a big fan of protecting. If we go higher, if I protect properly, I still get to participate in a higher rally. So let me make sure that I can get that $56 and not have to worry about it. Well, if we continue to go higher, then I'll be a participant. But again, I want to make sure these are big moves we just had. Mark, we came in D's, we went from 40 or 39 back to 51. That's a pretty good move, and I think that it's time to say at least let's put some protection on and save this to make sure that if we have a problem that we don't give back all the profit we just made back.
And Todd Horwitz saying that look out for some news we may not know about, but it may come out soon. Todd, thanks. I'll get the numbers for all our listeners and viewers, but we thank you for your time.
Thank you, sir.
Todd Horwitz, Bubba Trading. It's BubbaTrading.com. We got information there on that website. Here are the numbers here. Live cattle, feeder cattle, and hogs real quick. Here looking at February in this case. February live cattle up 14 over 109 now, 109.12. Looking at the feeder cattle trade, higher or lower, excuse me. And looking at the March down 36, 121.02. They've been down to the 120 level at their low. So they're actually $1 off of that low. And hog futures. Again, Todd Horwitz. Interesting comment I thought there that there's something going on that we don't know about here because this looks way overbought as far as February now over $56, $56.32 on the February hogs. And Janet, that's up over $1.50 yet today.
All right. Thank you very much,
Sure,
Mark. Appreciate it.